Hey, Dustin Tibbetts with Passport to Wall Street, and today we're talking about, do you buy a stock before earnings, or should you get in before they report earnings, or should you wait till afterwards? And what happens if you miss out and the stock moves without you? We're going to talk about Disney World because that is actually one of the stocks that are reporting earnings tomorrow after the close. The stock is actually Disney, not Disney World. But let's go over to the charts and take a look here real quick. So here's a chart of Disney. This is a daily chart. And if you look at this, over the past few months, the stock has just been killing it, just trending higher, 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 and higher. Well, today, the stock broke to new highs and added about 1.6%. Now, here's the thing. I can't disagree that obviously, this is a very strong, trending higher stock. It's very strong. There's no argument here. But now that they have earnings coming up, do you buy it and risk the idea of people selling on earnings, or do you buy it and hope that it continues even higher? Well, this is actually a great example where technical investors will avoid this stock. And I'll tell you why. It's already up a few days in a row going on this most recent push. If we go back further, it's already up for a couple months in a row. It's had a great run. So you run the risk of buying the stock. Maybe it starts higher and all these investors say, that's a nice profit, let me sell. And then you end up buying the stock right as it starts to fall. The other thing that could happen is the stock opens pretty flat or a little bit lower, and all these investors say, well, maybe that's the end of the run and it's going to start falling, and you end up buying it as people are already starting to sell. So this is a really, really interesting study because we're going to actually find out what happens, but if it starts higher, the odds are people will take profits and you'll end up buying a position at, relative highs, and so that could be a problem. What we want to do, preferably, if you like Disney, you'd like to see that people do take the profits, but you don't take any action. You wait and you let them take their profits and let it pull back and settle back down, and then you can actually get to work. Now, if you're an aggressive trader and it happens to start much higher or shoots much higher after earnings in the 120s, 121, something like that, well, that might be a short trade there, so something to consider. Well, that's just a quick look at when you might want to sit on the sidelines. Always look back and see what every other investor might be thinking. In this case, nobody's scared. Everybody has a profit. And so the question becomes, what if they take their profits? Do you want to be a buyer as months and months of buyers decide to take their profits? Probably not, right? Not really a good idea. So that is sort of our review today. We'll see what happens with Disney. Of course, if you're trading the stock, well, then good luck. Well, hopefully you make a profit, and we'll talk to you soon.